So tonight, you get to talk with Derek and I. I'm Angie. I am the executive director of Jumpstart Philly and Jumpstart Germantown. Work with Derek on a daily basis and all of you all in the Jumpstart community. And we're really excited to talk about our loan program. It's been a long time since we've had a JUMPinar that's just about our loan. We always kind of plug it here and there, but we really wanted to make sure that folks who maybe haven't done a loan with us before, or maybe have done one, but it's been a while, get the most up-to-date information. And we're going to split today up into two sections. So I'm going to start off with kind of giving you an overview of what Jumpstart Philly Loan Program is, why we exist, who we're for, what we do. And then in the second half, Derek's going to hop on and talk more about the application process and how you can use our Jumpstart program to make your real estate dreams come true. So we'll get started. So first up,
yeah, I just wanted to mention we will do a Q&A at the end of the session. So feel free to enter all your questions into the tab at the bottom of your Zoom toolbar there. It says Q&A, and then probably around, I would say 7:30 to 7:45 at some point, we'll switch over to the Q&A and work through those. So we probably won't take many breaks throughout unless there's something super important that we miss or misspeak on. But please do enter your questions in there, and we'll get to them at the end.
Thank you so much, Derek. And please interrupt me, Derek, if there's a really pertinent question. When I share the screen, I can't see those questions coming in. So, all right. So first up, our objectives. So why do we have the loan program? We really want to remove those financial barriers for new and aspiring developers. A lot of times it can be hard going to traditional lenders to try to get your first project funded. They might want to see a portfolio, experience, that sort of thing. So we're providing loans that the banks often don't approve. We are looking at relatively smaller loans, kind of messy construction loans that sometimes other lenders might not be eager to handle. And we're really, really welcome of new developers. And again, a lot of times traditional lenders aren't as excited about that prospect. And then finally, if you know Jumpstart, then you know our mission is to remove blight in Jumpstart neighborhoods in all of Philadelphia. So we are, putting this money on the streets to do exactly that, so that you can renovate properties and remove the blight in your own neighborhoods. And we are more than a bank. And I know that sounds cheesy, but if you've ever worked with us before, then you know it's true. We're not just a conventional lender. We are a mission-driven source of short-term financing. We're really here to guide you along the way. We want to make sure that you can compete with folks that have more experience, have available cash. So we're going to work really quickly. We're going to be as fast as we can. And we like to say, we can move as fast as you can move. So, we don't want to be the barrier to you getting that property under agreement and to closing. So we're going to move very quickly to make sure that you're able to close on that loan. And we also have below market rates. So you might say 9.01% doesn't sound below market, but when you compare us to other hard money lenders, it really is much lower. So again, that interest is only for 1 year because we're short-term financing. So it's going to be different than if you're looking at a 20, 30-year long-term mortgage. You definitely wouldn't want a 9% loan, but for a short-term loan, that 9.01 for graduates is pretty low. So that's really where we're trying to make it as feasible for those new developers as possible to get into the game. And a little bit about our success so far. In the last 10 years, we have closed almost 470 loans. We're almost at $60 million in loans committed, which is really exciting. And as I mentioned earlier, our loans are pretty small. So our average loan is only $124,000. So it's not, not a huge loan. For later on, we'll talk about our max loans, but our average is $124,000. So we're really proud of what we've done so far and excited to see these numbers grow in the future. So what is a Jumpstart loan and what is it not? A Jumpstart loan, it is for acquisition and construction. So that means you're going to buy the property and renovate it. That means it's not for a turnkey property. So a property that is ready to rent out and doesn't need any fixing up, that's not what our loan is for. It is for investment properties and not for your primary residence. So if you live in a home and you want to fix it up, the Jumpstart Philly loan would not be appropriate. We do have some other, programs in the city that might be able to help you out for that. And it is short term, as I mentioned, 12 months. So we're not a permanent or long term financing, and we don't have the ability to do that. So a lot of folks who use our loans sometimes will ask, oh, can I refi with Jumpstart? And we can't do that. So we are about revolving that funding and getting it out to more, more borrowers and fixing up more properties. And our loan is up to 85% loan to cost. So it's not for borrowers that don't have at least 15% of the total project cost. So it's not like a no money down. You are going to need to have some skin in the game. You're going to need to have capital to put into that project. And like I said, it's typically 85% loan to cost, except if you already own the property free and clear, so you don't have any liens or any mortgages on it. And then we can look at 100% construction only loan. And finally, we are an interest only loan. So you are going to be making interest only payments to Jumpstart. However, you don't start making them until you have finished construction or we have fully funded the project. So while you're busy working with your contractors and getting that property renovated, you do not have to make monthly payments to Jumpstart. The interest will be accruing as we disperse funds, but you're not having to make that payment. You're able to keep that cash to keep your project moving. So eligibility, it is for any property in the city of Philadelphia that has a residential component. So it can't be a commercial only project. We typically look at residential only. We've done a few mixed use projects. They're much more complicated. So our bread and butter is really going to be a single family, 3-bed, 1-bath, 1,200 square feet row home. We do a lot of duplexes and triplexes, but the property does have to be in the city of Philadelphia. So we get a lot of folks that are just outside of the city with a property, and it does have to be in that boundary. The borrower does not have to necessarily live in the city of Philadelphia, though. We do have, the majority of our borrowers do live in Philadelphia, and we're very proud of that, but you do not have to. So just want to make that clear. And it is also open to anyone. So a lot of folks think the Jumpstart Philly Loan Program is only for Jumpstart graduates, but it's not. We have a lot of folks who use our program that are not graduates, and that's totally great. The one thing that the graduates get is a 0.5 point interest discount. So that's sort of a little bonus for our graduates, but it is open to anyone. And we want to try to make sure everyone knows that. So if you didn't know that already, tell a friend. So, and then as I mentioned before, we do focus on that residential. When we look at mixed use projects, we are going to scrutinize them more because they are more complicated. And that 85% loan to cost is going to drop down to about 80% typically, just to make sure it's a more secure deal. And then the last eligibility that we're going to talk about tonight is the credit and proof of funds. So I mentioned previously that you will need 15% of the total project cost to close a Jumpstart Philly loan. So we're going to need to see proof of that. We don't ask for W-2s or income statements. It's just going to be a bank statement that shows, yep, I've got enough cash to put that 15% in, plus some money to get the work started. So we don't advance the funds for construction. So you're going to need a little bit of money to get work going. So we want to make sure you've got that and you're set up for success. And then we're also going to do a credit check. So unlike most banks, we do not pull credit. You are going to send us a consumer report from one of the 3 credit bureaus. So it wouldn't be from like a Credit Karma or one of those services, but Experian, TransUnion, Equifax, full credit report with a FICO score from the day that we request it. We will review it. That way you don't have any soft or hard pulls on your credit. And what we're looking for depends on the type of exit strategy you have. So if you are going to be renovating this property and then selling it, we aren't as concerned with your credit score because you're going to pay us back with the proceeds from the sale. So we're looking at your credit report and we're just making sure, hey, in the last 6 months that they've been paying their bills, that kind of thing. If you're going to be renting it out after you renovate it, that means you're going to have to refinance with another lender because, again, we don't do the long-term refinance. And at that point, we do need to make sure your credit score is at least 680. And not just yours, but anyone who is going to be on this loan. So if you have an LLC with 3 members, we're going to have to see the credit reports for all 3 members and make sure they're all at 680 so that we feel comfortable that you will be able to refinance at the end of the 12 months. All right, so I mentioned earlier that our average loan is $124,000. Our maximum loan per property, $350,000 for a single family, and then it can increase by $50,000 for each extra unit. And what that means is that if you have a duplex, the max loan would be $400,000. If it was a triplex, $450,000, and so on, up to a total maximum loan amount per borrower of $750,000, which I think is 9 units, which we have not had before, but that would be the maximum for a single loan, or that could be divided up over, maybe you have 7 loans that are each $100,000. But one borrower cannot have more than $750,000 out at one time. Now, that doesn't mean, once you close your loan, you can definitely come back and apply for another one once you've paid us off. So it's not a lifetime maximum. It's just at one time. We can't have $750,000 more than that to one single borrower. And then we also do have affordability requirements. So we are concerned about, keeping rents and sales prices affordable in the city of Philadelphia. So we worked with our funders, the folks who have given us the lines of credit, and came up with the maximum rent and maximum sales price based on bedrooms. So this is all on our website as well. But basically, like 3-bedroom maximum rent, $2,080. 3-bedroom maximum sales price, $314 or $314,200. So what this means is when you are putting in your project numbers in your pro forma and you have a 3-bedroom, if you're going to rent it, you don't want to predict that your rents are going to be higher than that $2,080, or if you're going to sell it, higher than that $314,000. So we need to make sure that the projects pencil out and the numbers work within these maximum rents and sales prices. And I will say the vast majority of our Jumpstart projects are well below these maximums. And again, all the maximums can be found on our website too. All right, so some cost details. I mentioned earlier, our current interest rate is 9.01% for graduates. And because they have that 0.5% discount, that means non-grads are currently at a 9.51%. Our interest rate does change the first of each month, and it's based on our cost of funds. So, when our costs change, we change the interest rate for all of our borrowers. It has been going incrementally, very small increments down, which we're excited to see and hope that continues. But basically, it's locked in once you close. So you close in the month of February and you're a graduate, your fixed interest rate for our loan is 9.01%. Some other fees that we do have, we have a $225 site visit fee. And Derek will talk more about that in the process part of the presentation tonight. This is not an appraisal fee. We do not do appraisals. Instead, we actually have an inspector that's going to go and meet with you. So that is the fee that we pay directly to our inspector to meet with you at the site before we do the loan approval. Once we approve the loan, we do have a commitment fee of $1,275. This is not refundable, but it is transferable. So if something happens and there's a title issue and you're not able to close the loan, you can transfer that loan commitment fee to another project for Jumpstart. We also have a $275 legal fee and a 2% loan fee, both of which we roll into the loan. So they are not due at closing, they're due at the end when you pay us off in full. And then if you need it, we do offer extensions. Hopefully you don't, because they are costly. We really encourage folks to, try to get their project done within that 12-month period so that they don't have to incur that extension. But we know things happen. Contractor might walk off the job. Your permit took 3 months longer than you thought to get, whatever it is. If you do need an extension, we offer those at 2% for a 3-month extension. And we can offer up to 2 extensions, so a total of 6 months. And each one of those will cost 2% of the total loan. So it is costly. Again, try to stay on top of it, stay on top of your team to make sure that you're able to get this purchased, renovated, and either sold or rented and refinanced within the 12-month period. And then just some additional terms. Briefly mentioned earlier that funds are advanced as work is completed. So that means when you close on the loan, you're not going to walk away with a check for the $80,000 construction budget that you told us about. You are going to instead work with your contractor, pay them, whatever upfront to get started, and then we will advance money as you are completing the work through a draw process. We do place a first lien on the property. So that means there cannot be other loans that are, at a higher position than we are. So we need to be in first position. If you have any other loans on the property, they would either need to be repaid before our loan, or they can take a second subordinate position. We require lender's title insurance. It's very important for everyone to get, owner's title insurance, and we encourage you all to do that. But as the lender, we're going to require that we also have a title policy. Then you're also going to need to get property and liability insurance. And that's going to have to be paid for a full year, which is our loan term. We want to make sure, there's no accidents that happen and that the insurance is lapsed. So we want to make sure that's paid upfront for the full year. And then the borrower is responsible for all city real estate taxes. So sometimes with your, home mortgage, it might be sort of escrowed together and your mortgage company pays your taxes for you. But with this loan, we do not. So we want to make sure that the borrowers understand that they are paying those city real estate taxes. We also do require a personal guarantee for all borrowers. So you don't have to be an LLC to purchase and use our loan. You can be an individual. If you are, and either way, you're going to sign a personal guarantee though. So if you're an LLC, every member of the LLC is going to sign that personal guarantee. And then, as I mentioned previously, it's interest-only payments. So you're making those payments once the construction has been completed, but you're not making principal payments. So it's interest only, and then the full principal balance and any accrued interest during the construction period will be paid at the final payoff. All right. And now I am going to stop sharing my screen and hand it over to Derek.
Sorry, I was muted. Can you see that?
Yep.
Okay, cool. All right, how's it going, everybody? This is cool to be on this side of the coin tonight, sharing my screen. Usually I'm the one watching someone else's presentation, but it's great to be here, and thanks, Angie, for covering a whole lot of information in a short period of time. I'm sure we'll have many questions as they come through, and glad to answer this for you in the Q&A tab. And also, I just wanted to mention, Angie and I will provide our emails and contacts after this. So if there's always specific projects that can have super specific questions that would better be answered over email, so or call if you wanted to set that up. So please do contact us afterwards. Okay, so jumping into this section, which is I'm going to talk about the application process. The good news is I'm the one fielding every single loan application that comes through from the get-go. So we'll really, be in close contact through that whole process. We're very quick to get back to you over email and, available for calls at our office. So I just want to put that out there as, we are the ones you'll be dealing with throughout this whole loan application process. And Monsi, who is our Drexel co-op. And just, we're very personal and it's one of our advantageous qualities that we're able to, directly converse one-on-one with everybody throughout the process. So to start, our application is project-based and property-specific. So a lot of people ask, do we provide properties or do we, have a list of potential Jumpstart projects? And the answer is no. So every loan application starts with you identifying a potential property and then submitting a loan application with property-specific project numbers. So what does that mean? Mainly, it's a couple main variables. First is the purchase price. So how much you've gotten the property under contract for, or whatever you're going to offer. Sometimes those are slightly different, but whatever you think you're going to purchase the property for at the time of application is what you'll enter there. Construction costs, how much the renovation is going to cost you over the course of the whole project. So that's everything from demo and framing all the way through finishes and painting and punch list items. So you'll give us a rough total on the application of what your full line item total would be. And then as we go through the application process and we start to work on your pro forma and talk about the specific scope of work, you'll expand upon that. But at the time of application, all you really need is a total construction budget number. And we'll get into a little bit more about how that works out through the lending process. But so we have the purchase price, the construction cost, and the last couple of project numbers are on the exit strategy side. So either how much you're going to sell the property for, based on market support and what nearby similar properties are selling for, or what you're going to rent it for if it's a buy and hold project. With that also comes the operating expenses. So how much are the utilities every month? Are the tenants paying that, or are you? What is the real estate taxes and the property insurance, renters insurance, all that good stuff. We'll ask you on the application for a annual operating expense amount. And then, like I said, as we get into the pro forma, breaking it down by line item, you'll have the opportunity to let us know exactly how much that rental license expense is or what your insurance is for the year. But for the application, purchase price, construction costs, and then your sales price or rental amount and the operating expenses, while you're managing the property as a rental. All right, I gotta speed it up or else we're gonna take forever here. So you can submit the application online at jumpstartphilly.com, and basically within always one business day, but sometimes the same day if you get it to us before noon, we'll respond and send you a auto-generated pro forma that we use from the loan application. So we'll pull all your project numbers together and they'll populate an Excel spreadsheet, which helps us analyze the deal. If the numbers look good, meaning that it has a 20% net margin or a 1.25 debt coverage ratio or higher, and I'll get into that in a second, that is how we determine pre-approval. And basically, here's where I want to explain. There's three different steps three different stages that you could be at in the process of acquiring property of when you apply. So the first is you might own the property free and clear already. It might be a property you inherited or just any piece of property you own. You can apply for our loan and get 100% construction only financing. But at that point, once we get all your project numbers, we'll quickly put together a pro forma, and then we can request your proof of funds and credit right away, and then move on to a site inspection very quickly. And typically those are the projects that move through that approval process the fastest, because you don't need to wait on a realtor to provide access for a walkthrough or anything like that. The other stage at which you could be is having submitted an offer on the property and it wasn't accepted. So you're applying it as the deal is under agreement. And at that point, you have a solid understanding of the purchase price because your offer was accepted. And you might have completed some walkthroughs of the property or visited with a contractor, so you have a good idea of the construction costs, and hopefully have done some due diligence with your realtor on the exit strategy side, what the sales price could be or the rental amounts. So, if you're applying when the property is under contract, we would be able to, again, request that proof of funds and credit right away, complete our final review, and then pass it on to an inspector to meet you at the property for an initial inspection. The last scenario is, and this is, I would say, where most of our applications come through, are for on-market properties that are listed for sale that you maybe haven't yet submitted an offer, or maybe you're waiting for your offer to be submitted or responded to. In that case, we're able to move really fast. So we, like I said, if you apply in the morning, sometimes we can get you a pre-approval by the end of the day if the numbers look good. That pre-approval is really just a piece of paper essentially, but it says our loan terms, indicates that we've reviewed the deal, and at least from what you've told us on the application, would be okay financing the project, dependent on a site inspection and some other contingencies. But the pre-approval is really something we can provide you very quickly, and it can help you get your foot in the door with the seller for either a site visit, a walkthrough, or any other due diligence you need to complete. So we do, like I said, all initial reviews within 1 business day. If everything goes super smooth, we can close within 7 business days. So I wouldn't say every loan closes that quick, especially when you factor in things like the title search and collecting borrower documentation and all that. But we like to move as fast as we can. So as Angie mentioned, you can compete with cash buyers. The faster we move and the faster you can get us the information, the better chance you have of actually making a deal work, or being able to get that property under contract, or eventually your loan closed. Okay, moving on. We've got the application evaluation. So what are we looking at when we receive that application? The first thing, and I would say this is our most important chunk of what we're looking at, is the project numbers. Does the deal make sense? Not only are you making money, but are you making enough money to pay us back when all is said and done, at plus some to profit from the deal? You don't want to go through a year-long renovation to only profit $500, right? There needs to be not only a profit for you, but also enough of a profit for us to feel safe about the project, about lending to the project. So you want to think, are you making money? What that could mean is a 20% net margin or higher, or cash flow at a rental that is bringing in more than what you're paying out for a mortgage every month. And like I said, can you pay off the Jumpstart loan? So when you either finally get that agreement of sale with your finished project, does the amount that you're going to walk away from at that sale going to cover what Jumpstart is requiring you to pay off? And if the answer is no, obviously we're not going to finance the deal, because it's bad for you, it's bad for us, and it seems obvious, but it's important to kind of critically analyze things and take a step back from the detailed numbers and just think, is this worth it? Is the whole process of going through acquiring this and renovating it worth it? So the next thing we look for is comps, knowing that the sales price you're telling us is supported by 3 properties within a half-mile radius and a 6-month look back. So we really want them to be as similar as possible. The closer the better, the more recent the better. We do understand that not especially in Philadelphia, where every neighborhood is very block by block and the markets are block by block, sometimes it can be difficult to find a triplex sales comp within those restrictions, a half mile and 6 months. So we understand, if it's 0.6 miles away or 7 months, we'll still take it into consideration. Just keep in mind, the closer the better. The more we can get an apples to apples comparison, the more likely we'll feel confident about that sales price. And same goes for rental comps. One thing I will mention here, and we may get questions about it, but the PHA rental amounts, the maximums that they have on their rent schedule are not guaranteed. And we still do need the market support to be there, so that when you do go to PHA and get your housing choice voucher and go through the tenant matchmaking process, that they're actually going to give you the amount that is set on that chart based on seeing similar rental properties being rented for that amount. So we get that question a lot about, my rent is $1,600 for this bedroom in this zip code, but we've asked PHA, and from what we understand, we really need you to have that market support. And there always is the chance that maybe you don't actually end up going through PHA and you need to list it for a market price, and we want to make sure that's viable. So the next thing is after the comps, we will, after finally fully internally approving the application, we will want to request your proof of funds, which can be a bank statement or even a screenshot of a bank account that has your name and account details. We want to make sure that you have access to the cash that is needed to close the deal. And another question we get a lot of the time is, how much money do I need to close on this deal? Or how can I calculate what my out-of-pocket expense is? I'll make this really quick. The first is you take the 15% borrower's equity. So what is 15% of the total project cost? I'll keep it simple. Say your purchase is 50,000, your renovation budget is 50,000, total project cost is 100,000. You need to bring 15%, 15,000 to closing as your skin in the game, your borrower's equity. On top of that, you want to make sure that you have funds for things like the Jumpstart loan commitment fee, the $1,500 that you'll pay after the initial inspection, your property insurance that you're going to need to get, which can easily be $2,000, $3,000. Then you need to have money for your holding costs. So, whatever you think the utilities, the taxes, whatever expenses could arise over the year-long loan term, make sure you have some funds put away for that. And lastly, and this is the most important one that a lot of people forget about, funds to get construction started prior to your first draw request. So at closing, when you finally close on our loan after that, 7 days of collecting documents, getting title insurance, you won't be walking away from settlement with a check to then go issue to your contractor or to pay for your construction deposit. You do need to have upfront construction funds, and that is totally, dependent on you and your contractor's agreement, whatever their percentage of upfront deposit is, as well as the project size. So obviously the upfront construction costs of a cosmetic rental grade apartment turnover are going to be way different than a duplex conversion full gut renovation. So make sure you're accounting for the size of the project and what your contractor is going to require. So again, 15% the upfront cost of closing the loan, and then your construction funds to get work started for the draw request. That's how much we're looking for in your proof of funds. Angie already mentioned the credit report, what we're looking for there. We'll request that. And then after we get those, we can quickly schedule an initial site visit with one of our great inspectors, RJ and Khalid, and they will meet you at the property very quickly and review your line item breakdown, how much the demo is, how much is the HVAC system, how is the basement going to be turned into a bedroom, and go over those sorts of things with you at the property. And this is our chance to really meet you as a borrower and get a feel for what your understanding of the project is, and that you're willing to make this insanely large commitment. Lastly, we will, finally, after the initial inspection, maybe there will be some questions about, this line item needs a little more funding here, or, did you think about this addition that might be, advantageous to the deal? So we will, review the scope of work again, maybe ask you a couple questions and make sure that you and your contractor are on the same page, or if you are the contractor, that you have estimates and subcontractor quotes for all the work that's described. But after that site visit, we'll review the inspector's report and then immediately issue that letter of commitment that will start the timeline to closing. How am I doing, Angie? Am I good to keep going?
Yeah.
All right, cool. So post-approval, and by approval, I mean after the initial site visit, when we issue your letter of commitment, like I said, that starts our timeline to closing. So that could be anywhere from 7 to 10 business days on the very short end. Sometimes it takes months because there might be a title issue hold up, and it takes a couple months for that to clear. But whatever the case, you'll receive that letter of commitment via DocuSign. And, if you agree to the terms, you'll sign it, and then we'll send you an email with details about the what documents we need. So first is property insurance. We'll want you to reach out to your insurance agent and get that builder's risk and general liability coverage. And we'll, let you know exactly what the requirements are and what we're looking for, as well as how to add us as additional insured on the policy. So reach out to your insurance agent and get some quotes. Next is send all the required borrower documentation to Jumpstart. So in addition to your LLC docs, like your articles of organization, if you are borrowing under an LLC, I don't know if Angie mentioned this earlier, but we do have, you can borrow under your individual name or an LLC, as long as the owner of the property on record is the same as the borrower on our loan, we're good to go. We will need your articles of organization as well as your operating agreement if you're borrowing with an LLC, and then also your title company's email address, because we'll need to send them our closing requirements about the title commitment and the reviewing the HUD and the settlement statement and all that good stuff. Commercial activity license. This is something you can quickly receive from the city. One of the few things that can quickly be received by the city, but it is, I believe, all issued online. So you just go in, apply for that, and make sure that you have that, because as a renovation project and a developer, you are doing commercial activity. So the city will require that, and you'll need to pay the proper taxes and such. And lastly, your W-9, which we will need because we're issuing draw fund payments to you. Last on here is staying on top of the title company. So like I said, most of the reasons our closings are delayed is because there is a title issue or somebody doesn't have the document they need in the chain of command. And one quick way to expedite it is just sending lots of emails saying, hey, what do you need from me? What do you have already? What does this number mean? And just making sure that you're keeping the ball moving and not assuming that things are gonna get to the closing line without your initiative. So be sure to stay on top of that title company, and then you'll get to the closing table and sign your documents, which is a really fun and surreal experience, especially if it's your first time. But the closing room is a fun place. So post-closing, this is immediately after you sign those mortgage documents and you get the keys to the property and you are the owner. First thing, and this is really, really important, get your permits, because the city is really cracking down on things. And we have heard time and time again of Jumpstart projects being shut down or stopped work because the city catches them, doing permitted work or work that requires permits without having applied for them. Pretty much all Jumpstart projects, unless it is a cosmetic renovation or just really updating fixtures and trim and finishes, it's going to require permits. That's everything from plumbing to electric to HVAC systems, even framing and drywall and insulation. All those things, depending on the size and scope of your project, are going to require some permit or another. So make sure that you determine a plan, whether you or your contractor is going to apply for those. L&I is a beast that you'll learn to work with if it's your first time. And, we have a lot of great resources through Jumpstart that we've tried to facilitate. And I know there's some permit expediters in our community that can help you with getting through that process. And not even permit expediters, just people who've gone through it and, can have suggestions of how to navigate Eclipse and the city's requirements and all that. But get your permits. I'll move on from that. I think you get the point. And then beginning construction. So make sure that you have a plan. We're right after closing. You're breaking ground. You're getting your demo crew in there to clean things out. You're getting started soon, because the time is money, and those funds that we disperse you for closing, say we bring $40,000 to $50,000 at settlement to cover the rest of the purchase price. Immediately that starts accruing interest, and the more days that you wait after closing, the more you're going to owe us. So we really want you to get started quickly. So we have a draw request form, which is basically a separate spreadsheet that has your line item breakdown and percentage completion of each of those line items that we track throughout the progress or project. Our inspectors will use that to provide notes on each line item and how much they're approving at each inspection. You will meet the inspector at the property to walk through and go over the budget of each draw request. You have up to 4 draw inspections included with your letter of commitment fee. So the $1,500 you pay up front includes up to 4 draw inspections. And then after those, we have to pay our inspectors for each additional one. So it would be a $250 cost for any draw 5, draw 6, and beyond. And some of our borrowers utilize that no problem, but other times it can add up. So it can be easy to add or kind of factor or when you're discussing with your contractor and payment schedule, use the Jumpstart draw process to kind of mimic that and make sure that you're able to get reimbursed for the funds you spent and keep the project moving as things goes along. Once you complete construction, we'll close out the loan, which is different than the loan closing. But the construction completion is basically when we start issuing those monthly interest payments. So either you've requested your last dollar from the Jumpstart budget and we've inspected the property and the work is 100% completed, or maybe you didn't use all your Jumpstart funds, but you're able to finish under budget and list the property. We would, you don't need to pay us any funds back that you haven't borrowed. So we would, lock in that accrued interest amount and then begin charging monthly interest payments on the first of every month after construction is complete. And hopefully, if your project is marketable and completed well, that should be less than a month because we would sell. Or if you're refinancing, you've gotten started on that process with your long-term lender earlier on, and you're really just renting it out and then refining and hopefully not paying that monthly interest payment too much. So yeah, once you do schedule that settlement and have a buyer or a refinance lender lined up, you'll pay off Jumpstart. And then I know this sounds crass, but hopefully we never hear from you again until your next loan. But yeah, essentially we are out of the picture there. So our loan term is short term, and ideally, within that 12 months, you're getting construction completed and then either selling for a profit or refinancing and, starting to generate cash flow through renting the property. All right, and the last slide here, just some best practices. And I wish I had a full 45 minutes on this because, as Angie and I review every loan application, we know what works best for you in terms of getting us to approve your loan. And I'm just going to quickly go through those here, and then we'll move into some Q&A. The first is communicate with Jumpstart. So time and time again, the reason projects either don't get completed within that 12-month time range, or whether they go over budget, or whatever the case, whatever reason could go wrong with a project, it usually starts with stopping communication with us, because we are your lender and we, are the ones funding the construction and as it goes. And we also have a lot of resources and knowledge that we can share with you. Angie and I, know a lot about the Jumpstart loan, but we're by no means construction experts or marketing experts or anything like that. But we do know a lot of those people. So, when you encounter barriers along the way and stuff, you communicate that with us, and don't on one hand, we have had projects that complete construction within 3 months, and they communicate with us a couple times, and that's great. But that's usually people who've done 5 to 10, 15 projects and are really, have that well-oiled machine mentality. With especially when it's your first time, communicate with us, respond, and when we email you about a question, it's not coming out of a way of checking in on you. We're really just wanting you to let us know what's the holdup and how we can help get that help you cross that barrier. Next, we have proofreading your loan application. So we intentionally ask very specific things on our application so that we're able to review it quickly and provide you with a yes or a no. Make sure that when you're entering in your construction budget, if it's $100,000, don't put in $10 by accident because you think it's by thousands. That could really mess up our whole calculation. So just read over that page again and double check for spelling errors. Make sure that you're not changing things after the fact and not updating us, and that the information on the application is accurate and decipherable. So you can apply quickly, but don't move too quickly because sometimes that can make us stumble in reviewing. Next, responding in the same email thread. So sorry, I missed one. Understanding your numbers and don't just make them work. So we've definitely see it where people are fudging the numbers to kind of make the deal work, or if it's at a 17% margin at one sales price, they might up the sales price on the spreadsheet without the or the required market support, and that just kind of wastes time because then we have to point that out, and then you have to search for more sales comps, and then maybe the deal doesn't work because the net margin is too low. So don't just try and make the deal work, or reduce that construction budget without confirming with your contractor that they're able to do it for less. Same thing with the purchase price. If you have the property under agreement for 90, but think you could maybe negotiate down to 75, put 90 on the application because you didn't, that's not confirmed yet. So don't just try not to fudge those numbers because they are, important in helping us know what is real and factual about the project. Responding in the same email thread. So don't create a new email thread every time we request something from you. We're working on sometimes 60 or 70 loans at a time, and that can easily overwhelm our email inbox, especially when things aren't kept in one single thread. So that's a simple one. Show up to all inspections on time and ask questions. So like I said, our inspectors are a wealth of knowledge and can really help you with little specific things that you might not, have resources to ask elsewhere, but this is an hour of their time that they dedicate at the property to answer those questions. So be sure to use them as a resource. Read all the emails that we send you. Sometimes our emails include, 5, 6 items that we need a response to, especially if it's a complex loan application and there's really, a lot of moving parts and things we need super detailed responses to. Just make sure you're taking the time to flesh out your responses to us. Make sure it's understandable and that you're not just responding to the first thing in our email, but not the 4 or 5 other things. And replying all. So Angie and I copy each other on every single email, along with our co-op Monsi, and it's really important that when you're emailing something to one of us, the other can probably handle it if the other's not around. So that can really close the loop on a lot of communication, and just make sure that you're replying all emails. Lastly is property address in the subject line. So like I said, we deal with a lot of loans, and we're pretty good. Sometimes I am impressed at how we're able to see a name and be like, oh, that's the loan with this borrower and that construction or contractor, but we're not good all the time. So it can help us respond fast and more quickly if you just put the 4 house number digits and the street name in your subject line. That immediately flags us. Okay, let me pull up this spreadsheet and this draw request form, and I'll find their number and give them a call. Can really move things along fast. Okay, I feel like I went over on time, but I'm going to stop there and give my voice a break. Angie, do we
It's
have any?
great.
Yeah, we have
Yeah,
any?
that was wonderful. One best practice I forgot to add on there is to follow us on social media. So we do a lot of like helpful hints and just sort of educational information on our Instagram and our Facebook. So in the past, we've had some tips on insurance, break-ins. We've seen that happen. So throughout the process, as we learn stuff, we share that with you. So that's a great place to see that information. And then also sign up for our newsletter. So it's pretty quick. It's once a month and it's a quick read, but we also try to put a lot of the new information that we might be hearing from L&I, or there's I think the state now has an LLC registration requirement. So there's like different things that come up, and as they come up, we want all of our borrowers to be made aware of them. And one other thing, just on the communicating with us, we are here to help you. Like, we really, really are rooting for you, and we want your projects to work and to be successful. So do not feel embarrassed if something goes wrong. It happens to all developers, and we've heard it all. So you might feel we've heard this from a lot of borrowers, that they are just embarrassed to let us know how badly their project is going. That's okay. Like, we might be able to help you over that hump and find an answer or a solution, and we want to get you to that finish line, but we can't do that if we don't know what's happening with the project. So it's just so important, and we really are here for you, and we're not going to judge. We're not going to come down on you. We're going to try to work with you to find a solution. So please do not stop communicating when things start to go south. So we can be on that resource list for sure, even though we are quote unquote just a lender. We are more than that, and we want to help you find those connections that can get that project done.
Yeah, and I'll add to that, even just during the application and review process. Don't be frustrated if you submit 2 or 3 pre-approval or loan applications for pre-approvals and the net margin isn't quite there, or the sales comps don't quite line up. We've had people submit 5, 10, 15 loan applications before they finally get one pre-approval accepted. And I think the repetition of the process and the ease that which we're able to kind of quickly scan over things and get back to you really can help you exercise that process of filling out a pro forma and completing your back of the napkin due diligence. So I want to emphasize that even before you close on a loan and we start collecting those monthly interest payments, we are here to help you. It's not something that we're doing for the paycheck. We love seeing the progress that our Jumpstarters make, and it's the best day we have at work is when a loan that we've seen the borrower struggle with finally gets paid off, and whatever the reason may be, it's a win-win when there's a house that's not blighted, not falling apart, and now either has a renter or a home buyer in it, and usually, like Angie alluded to, usually for much lower than what is considered market rate, especially in particular neighborhoods. So yeah, we're here to help. And yeah, I think
We
there's
do
one.
have, yeah, quite a few questions. I answered most of them, but I did want to just kind of touch on a few that came through. Yes, this presentation will be available. So we got that question a few times. Derek will be turning it into a YouTube video and also I think probably a podcast. Once it is available, he'll email you out the link to that so you can refer to it, listen to it, and again, and go back to that. I also had a great question about whether or not you can live in the property if it's a duplex. And I had mentioned, like, this is not for your own property. It's not for a homeowner, renovations, but a duplex is considered an investment property. So that is a different, kind of a different scenario. And you could live in one unit because the other unit would be considered an investment. And so therefore the loan, Jumpstart loan, could work on a duplex renovation that you live in one unit. We also got a couple of questions about whether or not the program, who the discount was for and how that worked. So any program graduate from any program in Philadelphia and Norristown is eligible for that 0.5 point discount on the interest rate. And it is not a one-time thing. It's not just the first loan. So for your life, you can, every loan that you get with Jumpstart, you'll have that 0.5 point discount if you are a graduate. Also got a few questions about when's the next program. So we're in the middle of a Jumpstart training program now, and the next one will be in the fall. The best way to find out when the applications open is to go on to jumpstartgermantown.com and fill out the contact us. And then we will alert folks, anyone who's signed up through the contact us, we will alert them as soon as that application is open. There are other programs in Philadelphia and then also Jumpstart Norristown. And you can go to, on our website, jumpstartgermantown.com, there is information where you can access those other programs and see when they might be running. We don't handle those training programs, so we don't always know the dates and requirements, but they are available to you.
Great. I want to answer one here from Millie, and she asked about the debt coverage ratio being at least 1.25. Could you explain that in more detail or point me in the right direction? So I can't get super in detail about it because it might get off track here, but essentially you want to be making at least 1.25 times cash flow, money in your pocket at the end of the day, compared to what you're paying for that permanent bank loan long-term mortgage. So if your mortgage payment is $1, you want to make sure that your profit at the end of the day is at least $1.25. It's kind of like the net margin, but on a month-by-month basis, compared to comparing your revenue or profit at the end of the day to your mortgage payment for the revenue. So that's something we cover in our training program and explain to folks all the time. So it's honestly the easiest way to understand it is to pull up our pro forma and just kind of plug in random numbers and then change them and see how it affects the debt coverage ratio, because that pro forma is like a living document. So it's almost like a calculator you can use, and it helps understand it a little bit. So thanks. Good question, Millie. Another one here is from Stephanie, and this is a good question. Is there a minimum loan amount that Jumpstart will lend? We don't necessarily have a minimum loan amount. There does need to be some level of renovation being completed that's beyond just like a new coat of paint or new house numbers or something like that. It kind of needs to be some blight removal, whether that be updating the kitchen or the bath or redoing the flooring or finishing a basement, something that's inherently improving the property value. That's what we'll fund. And in that term, there is no minimum dollar amount. It could be a $25,000, cosmetic construction only renovation loan, all the way up to a $350,000, full gut rehab. So that is that answer. June Waters Bay. Hey, June, how's it going? How do you know the interest accumulation per draw? So At the construction completion, we do issue a account summary. So it shows you the, how many days it's been since you received that money, how much interest that specific chunk of funds has accrued, and then, a total of all the cumulative accrued interest. But any time throughout the loan, we can provide that account summary and just provide you a snapshot of how much money has accrued on those funds. It's obvious, but the funds from settlement usually accrue the most interest over the full 12 months. And, if you requested a construction draw for $5,000, right before completing construction, it might not accrue that much interest. And it's easy to see on the chart, but yeah, we can update you anytime, June.
And then another couple of folks asked about new construction, which I did not mention, but it is something we will consider. To date, we have not completed a new construction loan. The numbers just haven't worked, but we have looked at a few applications, folks who own a lot and they want to build on it. What we look for if we're going to evaluate a new construction loan is we need to see all the plans and permits up front. So there's not a, dilapidated property that we can go and tour and say, is this construction budget going to work? So therefore, we need to be able to look at those plans and say, okay, is this construction number going to work for those plans? And then, of course, the permits have to be in place to make sure that you can legally build that there. So new construction is an option. Right now, it's just hasn't worked because the numbers haven't penciled out. It's often more expensive to build new than to renovate.
I mentioned this earlier, but June is also asking, if you own the property outright, are you still responsible for the 15% down? We have a 100% construction only loan available, so you don't need to, put any additional funds down. If you own the property, that is, your equity in the deal.
Great. And then I think let's see. Someone also asked if they can make payments during the construction, and absolutely, we have no fee or prepayment penalties. That's what I'm looking for. Yeah, you can make payments if you want to get that principal down. That's not a problem at all. And also, if you pay off before that 12 months, that's great. Less interest that you're responsible for. Again, no prepayment penalties. And there was another question that we answered, I think, in the chat. Oh, acquisition only. So just want to reiterate that no, it cannot be for acquisition only. There does need to be some renovation work on the home that's needed.
And it is 8 p.m. So maybe this can be our last question, and then we'll be sure to send out our emails again, and we can follow up with anybody tomorrow. But Millie is asking, what do you look for at the site inspection? What will you consider red flags that would make you decline the loan? That's a really good question. I would say mostly if we're sending it to inspection, we feel rather confident that, based on whatever photos we've seen from the listing or the street view and the breakdown you've given us, it is a pretty good shot that it's going to work out. The times it doesn't is when there's either first a lack of understanding about the scope and what the budget is for. So, there might be a miscommunication where on the scope of work you provided on the application, you're doing central air and, high-end kitchen and bath and everything. And then when you get to the property, the scope changes and our inspector might not see that aligning with the dollar amounts. So I would say inaccuracies about the planned scope of work and the actual condition and budget for the property. Sometimes we might, come back after the inspection and say, hey, you budgeted $3,000 for an all new central air system. This is a duplex. We think that might cost closer to 10. And if the numbers don't work, there's a chance we might deny that loan. But as I said, usually if we're sending it to inspection, it's within a borderline enough range where we will take the feedback from the inspector, take a look at the project numbers, see if it works, and move forward. And then, we're not interviewing at the inspection, but also, we don't want you to show up with your contractor and let them do all the speaking and not really engage at all. So, we want you to be present and knowledgeable about what the project is, because ultimately the loan will be in your name. So that site inspection can be usually a more of a learning opportunity than it is, checking off boxes or looking for any type of approval or not. You know what I mean? Okay, so that's Millie's question. Angie, is there any others you wanted to mention before we close up here?
I think we'll wrap it up. And one, I did see someone asked about our social media. We'll definitely send that out to everyone who registered so you can follow us. It's just Jumpstart Philly at Instagram, and on Facebook, Jumpstart Germantown. But we will send out those so you can be sure to follow us. And then the contact us form on Jumpstart Germantown will also subscribe you to our newsletter. So.
Great. And I
Excellent.
put our emails in the chat there. So hopefully you'll reach out with any questions and head to the website for your loan application. But thank you so much. This has been great. And I feel like we got a lot of great information across, and hope you felt it was positive.
Yeah, and thanks for 100 of you still here. I think it got up to 115, which is
That's
amazing. So
It's
really
record.
wonderful. Thank you for listening, and we hope to hear from a lot of you soon. So
Thanks,
thank you
everybody.
so
Stay warm and go Eagles.
much. Take care. Good night. Night, Derek.
Good night.